in a silver short squeeze like we're experiencing now, strange things can happen. And I'm afraid that a top in this cycle for silver will be around $300, $400, $500. And why $500? Because the traditional ratio, gold silver ratio, is 1 to 10. So silver being 10 times cheaper than gold. Well, gold is trading around 5,000 or over 5,000. In a 1 to 10 ratio, silver should be trading around $500. But I wouldn't be surprised to see a much higher price for gold in a revaluation scenario where central bank need a much higher gold price because, as said, it helps them for their balance sheet. And then you could think about 15 or 20K. I wouldn't be surprised.
In a silver short squeeze like the one currently unfolding, market anomalies become the norm, creating a pathway for prices to spike toward a cycle top of $300 to $500. This projection is not arbitrary, but rooted in a restoration of the traditional 1 to 10 gold to silver ratio. With gold effectively trading near $5,000, a mathematical realignment demands silver at $500. Villim Middlecoup, founder of the Commodity Discovery Fund and author of The Big Reset, analyzes these ratio dynamics and the potential for a central bank-led revaluation. Beyond simple ratio analysis, a broader monetary reset could drive valuations even higher. If central banks are compelled to revalue gold reserves to $15,000 or $20,000 to recapitalize failing balance sheets, silver would follow in a vertical trajectory. In this context, the current price action is merely the precursor to a systematic repricing of all tangible collateral. Now, we present the clips from Villim Middlecoup's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Silver hasn't been trading at new all-time highs till December last year. We had this triple top around $50 per ounce. And once we broke through the $50, it was quite certain for me that we would see a run towards $100 in months or quarters. And that's what we have seen now. Many people expect this to be the top. Many in the mainstream media call this a bubble. But during my talk here in Vancouver this week, I explained that in a silver short squeeze like we're experiencing now, strange things can happen. And I'm afraid that a top in this cycle for silver will be around $300, $400, $500. And why $500? Because the traditional ratio, gold-silver ratio, is 1 to 10. So silver being 10 times cheaper than gold. Well, gold is trading around 5,000 or over 5,000. In a 1 to 10 ratio, silver should be trading around $500. Yeah, that's the big question. I don't have a crystal ball, but I'm quite surprised by the speed of the rise of silver. I had expected a run towards $100, but later this year, or maybe even in 27. And the speed of this move tells me that we're very early in this short squeeze. And if I look at the numbers of the open interest on the COMEX, so the paper contracts, the future contracts in silver, the amount of open interest is still that high that we need 140 days of world silver production to cover that amount when it would be totally physically settled. So that tells me that we're in a very early part of this short squeeze. I think the same goes for gold. So as an investor, I'm the fund manager of the Commodity Discovery Fund. So as an investor, we always look for where's the bottom, where's the top, where are we in the cycle? Well, we came from a very long bear market in our space. And I think we're just in maybe the second or the third inning of this whole recovery process in the world of commodities. And I think prices have a bit farther to go. And $500 sounds outlandish, but that's only 5x from this point. And that's the same rise as the rise we've seen from $20 to $100. My target is $500 based on that old historical ratio. And because of the speed of the current squeeze, if you are in a short squeeze, and we've seen that with some of the GameStop um, stocks, or we've seen that in the nickel market, um, the moves can become very violent. So we've seen that in the last few days as well. Silver went up from 90 to 120 in just in a few days. So it's very hard to predict precisely what will happen, but a in an in a extreme short squeeze scenario, we could see prices of silver rising to two, three, four, even $500 in maybe a month. I'm not predicting that. What I try to say is that in a short squeeze scenario,
That could
which we
happen.
currently, yeah, currently we have this short squeeze scenario, and if this short squeeze scenario becomes more serious, and we see more stress building within the system, and more institutional players who are having trouble to source their physical silver, we could see a spike leading to those numbers in summer. I'm not predicting that, but it's a possible scenario. We know China installed an export stop for physical silver from January 1st this year. So it's clear China understands the importance of silver and the possibility of shortages. We've seen the US adding silver to their list of critical metals, which was quite special to witness a few months back. As said, the Russian central bank is hoarding physical silver. And when you look at the supply and demand numbers of the last few years, then you can, and these are all published facts, then you see that world silver production is less than 850 million ounces, and world demand is 1.3 billion ounces, and I expect that to be an even larger number this year. So this production deficit has reached a level which is very hard, I think. Let me put it this way: I think some institutional investors who need the silver for their products are getting a bit nervous.
Silver's recent breach of the historical $50 triple top has triggered a massive repricing event, propelling the metal toward $100 far faster than models predicted. While mainstream analysts dismiss this as a bubble, market mechanics suggest we are in the early innings of a historic short squeeze, similar to the violent upside moves seen in GameStop or nickel. The current velocity indicates that a cycle top of $300 to $500 is not only possible, but probable, driven by a reversion to the traditional 1 to 10 gold to silver ratio, with gold establishing support above $5,000. A mathematical realignment targets $500 silver as the new equilibrium. The structural stress is visible in the COMEX open interest, which currently requires 140 days of global production to cover, a physical impossibility in a deficit market. Geopolitical shifts further exacerbate this squeeze. China has halted silver exports, the US has deemed it a critical mineral, and Russia is aggressively hoarding supply. With global demand hitting 1.3 billion ounces against a supply of just 850 million, institutional panic is beginning to set in as industrial users realize the physical metal isn't there. Let's get back to the interview.
Gold might become more important because gold has been a central element of central bank reserves for centuries. And the thesis of the big reset was that we would reach a point around 2020 where the dollar would use its sole role as as the world's reserve currency, and where gold would gain momentum and we would see a revaluation of gold to a much higher level, which would also support central bank balance sheets worldwide, because central bank balance sheets, of course, have been become quite unstable because of all the money printing we've seen after the Lehman crisis in 2008 and the COVID crisis. So in a way, this is all connected. And because silver is such a small market and it's poor man's gold, once you have this huge demand for gold, where gold becomes more important as in a monetary way, you also see a follow up in the silver markets, and that's what we're seeing now. And because these silver markets are so small, you get a more violent move in the silver market compared to the gold market. I always predicted in the big reset that we would see a revaluation of gold and silver by market forces or organized by central banks, pushing the precious metals to a much higher level to help support their balance sheets. I think we're now in the short squeeze where market forces are leading to this repricing. And during my talk, I called this the start of the metal wars. I think we're entering a whole new era where not only the precious metals, but also critical metals like copper will be repriced to a much higher level. We see the same for uranium. This is also this has also to do with the supply and demand around 2030, and that's only a few years out. And after 2030, we will see almost permanent production deficits in many of these metals. And this also explains why the US has put 60 of them on their critical metals list. So there's so much at play here that when we do presentations for new investors, we always say this is now like a perfect storm, not only for gold and silver, but for the whole commodity space, because you have the debasement of currency. That's why investors are fleeing towards hard assets, and gold and silver being the hardest of all. Then you have the geopolitical tension, where commodities are being weaponized. And then you have the huge central bank demand. They're preparing, I think, for a monetary reset. That's the only reason why they would collect these large amounts of gold. And then you have the fundamental supply and demand situation where all these metals are seeing production deficits, or many of them are seeing production deficits already, and many more will have production deficits in a few years' time. And I haven't seen one researcher or one report explaining me and the rest of the world how these production deficits can be solved, because we only have one planet Earth, and we as a fund are specialized in investing in new mineral discoveries and new metal discoveries, and it takes 17 years on average from a point of discovery to opening of a mine. So we have a structural problem, and Robert Friedland is pounding the drum on the same topics from a copper point of view. We know that Elon Musk proposed to do a live stream from Fort Knox. Well, how has that story ended? Everybody is silent about that because everybody knows there hasn't been a full audit of Fort Knox since the 1950s, and all we have is some grainy color photos from the 70s showing actually nothing. So in our world of billion experts, there's huge doubt whether the US is still in control over 8,000 tons of physical gold. I think the repatriation trend will only get stronger, and this will add pressure, and this will add oil to the fire we are seeing, and this will help to further revalue gold and silver. Target of $5,000 gold. That was 15 years my target. Well, we reached that. Let's be conservative and go to $10,000 for an ounce of gold within the next few years. But I wouldn't be surprised to see a much higher price for gold in a revaluation scenario where central bank need a much higher gold price because, as said, it helps them for their balance sheet. And then you could think about 15 or 20K. I wouldn't be surprised. China would introduce a BRICS currency called the unit, which would be gold backed for 40%. That would lead to a revaluation of gold almost instantly. We still don't know if that will happen, but if they would take such an action, they will take the initiative. And I think it's always very important in these, well, financial economic wars or kinetic wars. It's always important to take the initiative. And for me, it's clear gold's role within the international monetary system will increase. For me, it's certain that we'll see a further revaluation of gold and silver prices, but I'm not sure who will be in charge, because, as said, the current revaluation is just by market forces. And what we haven't touched upon, but is very important, and I think we have to end it there because I need to run. Is we see that the gold discovery pricing mechanism, which used to be in the US, the gold discovery pricing mechanism has clearly moved now to Asia, to Shanghai. And how do we know that's a fact? Because the large price intraday price swings we see now during the Asian trading hours. And if you look at the current premium, which we'll see in Shanghai markets, this tells me that China is now in the lead and the West is following.
We are now entering the era of metal wars, a perfect storm where the debasement of fiat currency collides with permanent production deficits across the commodity complex. With mine development taking an average of 17 years, the supply cliff expected after 2030 cannot be resolved quickly, creating a structural floor for prices. This reality is driving a massive revaluation of gold, potentially targeting $15,000 to $20,000, a level necessary to recapitalize central bank balance sheets ravaged by post-2008 money printing. Crucially, the pricing mechanism for precious metals has visibly shifted from the west to the east, with Shanghai now dictating significant intraday swings. As doubts linger over the actual state of unaudited Western reserves like Fort Knox, the global financial order is pivoting. Nations are preparing for a gold-backed monetary reset, potentially introducing a BRICS currency unit that re-anchors the global system to tangible assets, leaving the dollar's hegemony in the rearview mirror. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.